afternoon, James. Good afternoon, everyone. Someone's keen today. It's 1:30. It's 1:30, mate. Okay. Sometimes, I'm a minute or two late. Generally not. Thank you. Hope you're doing well, bud. Yeah, well, sometimes I do load it up a couple of minutes early, don't I? If you look at the run times, sometimes that happens. Hey, good afternoon, Scotty. Good afternoon, Michael. Good to see you guys. Hey, team. God, it is absolutely pouring outside. I don't know if you can hear that on the mic. To be fair, it's got good noise, good sound cancelling, this microphone. But it is crazy the amount of rain that's hitting the office windows at the moment. Absolutely crazy out there. Yeah. Yeah, Scotty, to be fair, I'm not far away from you, am I? You're only about, 40 minutes or something east, aren't you, I think? And beautiful sunshine today, it was miserable. North London. Yeah, yeah, that's it. Yeah, yeah, yeah. That's it, mate. You're literally like 20 minutes. You're literally like 20 minutes down the road. Yeah, we've said that a couple of times. To be fair. Hey, good evening, Matthew. Good to see you, buddy. So let's get cracking on then. First of all, I hope everybody had a good weekend. I won't spend too long digressing on my weekend, as I already had a good chit chat about that earlier on. Um, Safe to say it was a real once in a lifetime experience. Absolutely fantastic. It was really good climate conditions and yeah, some superb adventure. It really was. Me and the missus combined had probably about 6 panic attacks on the way up. It was terrifying, exhilarating. Yeah, just everything combined. It was bloody awesome. Looking forward to the next one. For sure. Can't wait. But yeah, so what are we expecting this week then? Well, first of all, let's have a little recap on Friday, considering I was doing the majority of the driving this weekend. So I do apologise for not sort of being around in the afternoon on the Friday. The NFP came out of 254,000 jobs, I think it was, which was quite significant over the expectation. I think we were at 128 or 125, something like that, expected. So it was, double, really, double the expected amount. The US dollar, as a result, did power up. It did get a significant rally going on as a result from that. I mean, Friday, we started off the day with this little dip here, and then boom, we get this huge move from a low down here of 101.80 to the end of the week high at 102.70. It's a really, really nice, big, powerful move that actually saw the dollar index break through liquidity at this stage here as well. Now trading upwards of that sort of 102.30 level of money there. So we do have a path of least resistance. We want to see the retest of that 102.30 area first before we get the continuation up to this area in here, which is what we're looking at next, back up at around 103.50. However, I mean, obviously this is bad news. We only had the euro yen remaining. And so that was the last trade that we, whoops, I don't want to do that on this one, sorry. And so we only had the euro yen remaining. And the euro, as a result, obviously got crushed. But at the exact same time, the Japanese yen had a major adverse reaction to this and went flying down. And so therefore the euro yen came up and hit target profit. Obviously this isn't by chance. I was around on Friday morning and I was catching up with you guys about the plan, explained that we shouldn't be removing the euro yen. We were going to let that one run. And yeah, I mean, look at it. On Friday early morning, right up until about 10 o'clock, 10 o'clock in the morning, we were at break even. Break even trade. The NFP in one fell swift move completed our trade for a 1 to 2.5. So really, really happy days there and a great way to end the week. As far as the pound CAD went, and that was the pound CAD as well. Look at that. I mean, yeah, I was really pleased. Really, really pleased with that GC. Very, very impressive performance. With the pound yen ended up coming down. That was really early on Friday morning. We had a real few dicey moments, but our positioning of liquidity there was really, really helpful in protecting our asset value from rising, essentially. So we did manage to get that one in the bag as well. And that basically gave us a clean bill of health. Obviously the GA as well went down, but we covered off majority of those trade ideas. These are all the last week's, from sort of Thursday onwards, where we saw these sort of drop in the bag. But some really, really good performance. Look at the gold. I know we covered this last week as well, but it's just to make a point that we were on the ball with our targets last week. In a lot of these hitting the TP by really, really small amounts before getting these really nice reversals. Obviously, I wasn't on the other side of the market for any of them. But if you were a really, really active participant last week, you could have been, and there was a shed load of money to be making. Look at the mirror image on the pound yen, for example. Look at that. I mean, yes, we did have this fake out low down here, but this was a superb W reversal. Absolutely superb. We got a break, close, and retest to the W's midpoint as well. You'll probably be able to see this on a 1 hour time frame quite a bit more clearly. So let's just get rid of that. Clear up the chart a little bit there. Yeah, so look at that. For that W reversal, I mean, it is absolutely sublime, isn't it? So I think all things considered, yeah, okay, the first Monday and Tuesday, yes, they were a little bit dicey. The US stock breakout sessions were pretty good, and they really did keep the portfolio afloat. We took a fair few, we took a consistent series of hits in the European session. I don't think we won a single European session last week at all. But the US stock session obviously sort of broke us out of that fashion, which is pretty good, broke us out of that theme. But in short, last week was really good. I mean, the returns that we were looking at from the funds trade ideas, I mean, it was over 6%, I think it was in the end of it. So really dropping the hammer down, which was pretty good. So we can essentially clear down all these now and start to work our way through. We'll check out the old economic calendar, see what's up and coming for our fundamentals. As always, Scotty, you see anything I'm missing here, mate? Please feel free to just shout it out and tell me to stop messing particular events. That's fine. So looking in today so far, then we haven't had anything of significance. We did get some retail sales data for the European Union. That was out this morning, quite early, 10 a.m. And we didn't really see too much of that. Same as it was exact on forecast, 0.2% uptick from the previous figure. The retail sales annual data for the EU, remember obviously it's not country specific here, but it was very, very bullish. Minus 0.1 previous figure, 0.8 print. Very, very bullish read on the annual retail sales data there. So if we go down and check out the rest of the week based on a market impact point of view, looking at only the major impacting news, it's not, I would say, an extremely busy one, but the events we do have are very impactful. So the highlight of the week is going to be around the US, and that's on Thursday, October 10th. 1:30, we do have the inflation data for the United States. Core inflation, monthly annual, and base inflation, monthly, annual. All of that inflation data is going to be really, really impactful to the markets, regardless of the print. Prior figures in the moment 0.3, 3.2, 0.2, and 2.5. We are looking across the board, predominantly across the board, at downticks in the inflation rates. 0.2 down from 0.3, 3.2 base, 0.1 down from 0.2, 2.3 down from 2.5. We are looking at this coming down across the board. That's going to be pretty bearish for the US dollar, but it's going to be pretty damn bullish and very hawkish indeed if it comes out at point, or if it beats expectations, or not beats expectations, sorry, if it misses expectations. It's going to be incredibly bullish for our US stock markets, which means a lot of fun to be had on that Thursday. So we'll be really counting down the days for that Thursday move, because I think it's going to be a pretty big one. Looking at Wednesday, on the evening of Wednesday, 7 p.m., we do have the FOMC minutes as well. This is a really, really big one for the United States. Apart from that, though, team, we have nothing. We do have the BOT at 7 a.m. for Germany. BOT, generally speaking, is quite a big one, but for Germany in itself, probably not. You're not really going to see a great deal from the euro. From an FX standpoint, you may see some market impact at 7 a.m., sort of end of Frankfurt, beginning of Frankfurt even, in the morning in the DAX. So you might see a little bit of volatility there. Do be aware of that if you are trading the European session on Wednesday morning. Then moving back over to Friday at the end of the week, we have the Canadian unemployment rate data, which does sometimes take place alongside the NFP, which always makes the UC a really good trading pair. However, this Friday is the unemployment rate instead, and that one's going to be a big one for the CAD. We are looking at a slight uptick, which is going to be very bearish for the currency. So do watch out for that one if we've got any Canadian dollar sort of exposure. But the highlight of that day on Friday is, of course, the PPI. And this just ties in really nicely with all the inflation data, which ties in probably quite nicely to what the FOMC minutes is going to be all about as well. So we have 7 p.m. Wednesday, FOMC, leading into Thursday at 1:30, inflation, into Friday, more inflation. So big one for the US this week. As I said, not really too much of else happening across the rest of the currencies at the moment. So probably quite a slow week in terms of fundamental catalysts, but the dollar is going to be hammered. And of course, we also have the US stocks to think about there as well. So first of all, any questions? Any questions at all on any of that stuff? Scott, you got any missed out catalyst to chime in on? Or did I hit the nail on the head that time, pal? Pints on me, mate, when we see each other. Good man. All right. All right. So, looking at the rest of the markets then, let's get going. I'm going to add in corn from now on. Now, corn, as far as my research has gone, is available in many of the funding challenges. If it's not, then that's just tough cookies. I've seen corn come up quite a few times now in the funding challenges as these proprietary places have increased their asset baskets. And corn is actually a really nice trading asset, I personally believe. So I'm going to start including that one. I'm including it myself, so it's going to be included for everyone else. So looking at the daily time frame in corn at the moment, it is incredibly bullish right now. We've had a very, very nice surge in volume once we came down to this major weekly level of supply and demand. We actually broke structure here, which is on the 3rd of September, and it hasn't stopped rallying since. We've come up, we've broken structure, we've got a break, close, and a retest on the daily time frame, which is still at the retest stage, but it does look like it could continue from this point on, and I would be really happy seeing the previous daily high as the level for the first TP. Now, if we look from here, we have a really awesome breaker structure point for a continued long, probably back up to around 470. It's currently trading at 431, or maybe 432 actually, I'd probably say on that one. And if we go down the 15-minute time frame here, we are essentially looking at that level in there as the TP. So let's just mark this out nice and clear. This level here for the target profit. Now, for a potential long, we're going to be looking at the break of structure area, which is taking place around here. This area, representative of the break of structure, has happened here as well. So we do need to kind of take that in. Need to take that into consideration. But I'm still happy with this being the level to watch out for that BOS, and then the continuation back up to the previous highs at around 440. So the trade idea is going to look something along the lines of this, with that stop loss a little bit lower there. So maybe a 1 to 2.65. Now this can be based on a pending order. Okay, it is indeed pending order material, as we are still we're still very much in the bullish trend. Nice level of impulsive corrective waves. All the structure is intact, and right now, if we get that break of structure here, we are looking good to the top. It's a break, close, and a retest for the long above here. Break of structure for the move from there. So that's looking really good. I'm going to place a long in that one. Now, looking at UK Brent, we unfortunately incurred the loss at the end of the day with that trade. We were in it for a pretty significant amount of time, all Wednesday evening into later evening, and all across into Thursday, right the way up until this point here, which is where it triggered the stop loss at 10:30 on Thursday morning. It was a real unfortunate thing. It got so damn close, but there we go. Looking at where we're trading now, it hasn't stopped, and it has continued trading higher. We're currently trading at 79.53 per barrel. I think long is probably the way forwards. We have this point here, which is a very cash-rich area in the oil markets. So then looking at a potential break of structure point for this one, we're going to be eyeing up this area in here, which is your break of structure. We have the TRF, which is up there, but we do have the potential here for a very nice trend continuation trade, which is going to be put in about here for a 1 to 2.5. So you can either take the trade there, or you do have the capacity to wait for the break of structure above this area and then take another bullish trade above there. You don't have to take both, but you do have the capacity to take that trade because the risk reward does work out fine. You're looking at a 1 to 2.15 there. So a slightly better risk reward ratio on the first one, but obviously the path of least resistance isn't completely intact. If you wait for the second one, very nice path of least resistance, but your risk reward is slightly decreased. So it's down to you guys. If you want to know exactly which one I'm going to be invested in, I am looking to get involved at the 80.81, which is the first one for the 1 to 2.5, right the way up. But again, you do have both available. So I'll leave that one down to you guys, whichever one you see fit. As for the shorts, before you ask me, is there a trade idea on the other side of it? No. In short, I am only bullish in oil at the moment, so that's the way it's going to be. If we do continue trading lower, then I will look at buying into oil back down to 77.50, possibly upon the rejection of 78, and then getting invested in at around 78.62 as another option. But really, from this point on, I am only looking at the bullish trend continuation trade idea. Okay, looking at gold then. Let's remove everything from this. So gold at the moment continues to range. We're still up at around that all-time high area, not too far away from it. We do have very nice intact ceiling and floors to the current range as well. So looking at this one here as the potential floor, and then looking at this level up here as the potential ceiling. Possible ceiling here as well. We do have a lower one at around that 2660 area. But right now, this is looking quite nice. We've got lots of intact movement between these two areas. As it happens right now, we are looking at the range to continue. There's no reason to suggest otherwise. Gold did manage to make it through the NFP pretty much unscathed. It didn't actually impact this range too much. Friday afternoon, we can see this is the NFP move. Gold dips down below that point just the once at 26.32. And then comes back up and completes another wave of the range, then corrects and completes another wave of the range. As it stands right now, we have 1, 2, 3, 4, 5, 6, 7. We have 7 completed risk-free range continuation waves. Okay, where if you were in upon the breaker structures, you wouldn't have been stopped out. 7 of them. At the moment, this one is the only one, the most recent one, that has seen a lack of continuation to the range high before selling off significantly. So we do need to take into consideration the fact that the range has been intact for a while now. It's established, but it could be aging, which means we could be losing some of its strength, let's say. So I would say the breaker structure level is going to be there. If we get the breaker structure, it's going to be the full distanced trade, and we're going to be looking at the move straight the way up to the range high with the stop loss basically where I left it there, at around that 2640 area. If we get negative imbalance confirmed, okay, so we need to wait for the break close and successful retest of this area before we continue, then we will be looking at a target profit down here. And this is our next point of call. So the margin down to this area is slim. And so therefore, once the break close and retest takes place, it needs to be at, a sort of decent, how do I say this? In order to get this trade to work, we need to see a real aggressive stance on this position. And the best risk reward you're probably going to come away with is a 1 to 2. At best, you're most likely going to see a 1 to 1.8. That's what I would imagine on the short. I would probably be on the side of seeing gold trade all the way back down to 26.26, and then actually taking the long to the range from here, and then considering this as my money in the bag before I reach the first major TRF, which would be the bottom of the previously used range. Now, that might be slightly risky doing it that way, but I think for anyone who can manage their position properly with active trade management, you will be able to see if you get a counter trend breaker structure here, then you want to be out of the trade, and no matter what, you're probably going to be out at a small win. So it doesn't really matter. For someone like myself who is solely basing his parameters on set and forget ideas, yeah, okay, that might be possibly not the smartest move. I may decide to exit it freely and then have to go through the rigmarole of manually updating the track record with that, which is a bit of a pain in the rear end, but it's not impossible for me. So if that happens, I will explain the situation as I always have done anyway for you guys, so you've got it all absolutely clear. But that is a possibility. So wait for the market to come right the way down, break a structure entry upon the rejection of the cash rich area down here, and then have a big whopping trade right the way back up to 2666, which isn't exactly confidence boosting. I don't really like the 666 number, but there we go. That's what it is. So yeah, and we'll see how it goes. So let's have a look now. So Aussie CAD, let's get rid of this. So Aussie CAD at the moment trading down at liquidity. It has dipped its toes beneath the little one that we could have had, but not necessarily this one. I think that's a decent level to have. And judging from this at the moment, it looks like it could have formed quite a nice floor. We have a point of liquidity in here. Okay, so this is a nice inflection point here. Big rebound. Big arcing rebound here. Then NFP volatility shot through. And then rebound 1. And it looks like it could be potentially going for a second rebound here as well. It may well continue to trade beneath. I think at this moment in time, I would like to probably revisit the Aussie CAD tomorrow to ascertain whether or ascertain exactly where we are, and let Monday do its Monday thing. Let the market do what it wants to do, and we can take a view on it tomorrow. At the moment, we could look at a bounce back, possibly looking at back up at the range ceiling at around 92.63 because of this price action, but we're nowhere near the kind of criteria that we need to take that trade. It could trade underneath, and then we'll be waiting for the breaker structure below 91.90 to see if we're going to go all the way back down to 91.32. But again, we're nowhere near that completing either. So there's a bit of work the Aussie CAD has to do before we are able to get that clarification from the current setup. So I'm going to leave that one for the time being. Moving on to Aussie Yen. So completely remove, start afresh. Aussie Yen at the moment, again, real lack of trading volume here. Has had a very, very slow, grindy move to the downside, basically recovering all of its gains from the NFP that we saw on Friday. So this is the NFP candle here. Slowly ground its way up to the end of the week, and then opened up on Sunday, and then continued grinding all the way back down. We're about 50% of the NFP bar here at the moment, and that will probably land all the way back down at around 100.3. So looking at this one at this stage, let's go back up to the daily, have a look at here. Daily time frame at the moment does show the price action is still nicely trading on top of liquidity. So we're not really running the risk of directional change in this move so far. The point of the mid, if I just remove that. So let's remove that. So we had the rebound. This is going to be considered the retest of the W. If that takes place, then we could be looking at a really nice move all the way back up to the previous high. Yeah, that's the one. So at this stage, this could just be a collection of retests of the W midpoint on the daily. If that is the case, then we're going to have a really, really nice continued run up to the high. It's not going to be at the same volatility as we saw to the downside, because obviously this was caused by chain liquidation, but it will be quite nice. And on the 15-minute time frame, it will yield many decent trend continuation trade ideas. So what we're going to be looking at here ultimately is price action to come into liquidity, fuel up at the station, and then once we get all of our team members, i.e. the banks, all coming in on these moves in here, which they've got loaded up, it's probably in the middle at around 100. There'll be a lot of orders at 100. Yeah, there'll be plenty. That 100 level, yeah, definitely going to see a lot of orders around there. So what we want is the price action to drop in. Once we see a counter breaker structure, probably around this area, moving up, and then we're going to be looking to take a first trade of the trend from this point on, and target profit is going to be at around there, the previous 15-minute high. That's going to yield a really nice position as well. You're probably looking at around 1 to 2.5. Yeah, 1 to 2.3 maybe on that one. So this area in here, that's going to be there. Yeah, 1 to 2.3. That's around about what we're going to be looking at. Maybe a 1 to 2.3 to a 1 to 2.5. Obviously, this is speculation at the moment. We need the price to be able to drop back down, get into the cash, load up at the station, get on with the move, and then we can trigger that trade. So 1 to 2.3 to 1 to 2.5, that's going to be on the books. Remember though, team, this is not a pending order. We do not have the accessibility of putting a pending in because the market needs to come down to this area first via the path, push in, and then push out. And this is going to be representative of the level that we want to see broken through upon the exit. So I'll tag that one as a green for our long bias, but remember this is going to be a slow burn because we need the price to push into that liquidity and then away. Target profit probably going to be at around 101.23. Stop loss probably going to be around 110, maybe. I mean, this is saying a 1 to 2.85. I'm not sure yet where that's going to be. I can't believe that we're probably going to see a 1 to 2.8 out of it. So I'd be more, comfortable putting a 1 to 2.5 and leaving it there. Aussie NZD. So Aussie NZD so far. Let's get rid of all this old junk. Still trading very high. Current trend state structure, very, very gradual. It's a bit of a slow grind at the moment. Not to say that the establishment of the trend hasn't been nice, because it has. It's been very consistent, but it's been slow going. So your money would have been exposed to the market and at work for a long time for a small return. Looking at the daily time frame up here, the daily looks like a beast upon itself. Really beautiful trading volumes on that daily time frame. Where has the daily come to? Look at that daily level in there, right? Well, we can't exactly be taking longs there, can we? Right, there can't really be any bullish bias in this yet. So now the Aussie NZD, based on what we've seen from the daily time frame, is at a really major institutional decision point, which means now we need to wait for those banks to make their play and then jump in on whatever they decide to do. Are there going to be a lot of institutional sellers with shorts placed in the market in this area? Or, in actual fact, is there going to be a lot of institutional buying power that's going to be pushing up and through this liquidity, pushing the market back up to the previous high, which is at this point in here? Now, I would like to think on the side of the latter, okay, that there is going to be more institutional buying pressure entering the market. We might see a bit of a dip back from this area, but then a push through and north up to the previous high at 111.37. Now, I can't have that bias fixed in the market because I have to be adaptable. We have to think on both sides, as we always try to do. On the 15-minute time frame, we do have short and long availability. The short is obviously always going to be easier because it's easier trading rejections based on the criteria. So in order to take a rejection from this area, we're going to have to look first of all at a target. So the target profit point is going to be at about there. Okay, this is the only major inflection point we've reached before this one in our way up. So this one that sits right sort of, slap bang kind of in the middle-ish. So that's going to be there. The break of structure point for this one, where do you think? Where are you guys thinking, looking at that chart at the moment? You got any ideas on a inflection point? I just read your comments, Scotty. Yeah, it's coming, mate. It's coming. Where price is right now? 110.39. Yeah, break of structure below the level it's on top of now. 110.39, that's where you're set. Okay, cool. Matthew, Michael, you guys there? If you're, yeah. Same, 110.39, that previous low. Okay, right, let's check it out. So 110.39. 110.39's there. That's where you're set. Okay, so if we say that that point there is the liquidity for the breaker structure, 110.39 is pretty much spot on. I would probably be a little bit more gracious on my actual entry. 110.39 is the breaker structure. Don't get me wrong, it's absolutely spot on. But I probably wouldn't get into the market until 110.37, something like that. Yeah, so just leaving a little bit of a margin there from the breaker structure point to the entry. Just that little bit of a margin there, so we can account for possible wicking. If the market really wants to wick that low, it'll probably catch us out anyway. But you're absolutely right, guys. You are all correct. That's exactly where around abouts the trade should be. So now we're looking at a bearish view in the Aussie NZD from there down to there, which is yielding a 1 to 2.2. Now the long is a really, really big trade. So the likelihood is we're going to be looking at a split trade, one to the midpoint, and then a break close retest the midpoint to the high. We're going to be breaking that down into two halves. The reason being is because on a 15-minute time frame, taking the trade idea that that's big, it's just a little bit too big. And I would prefer to cut that down into two halves, taking two 1 to 2s or two 1 to 2.5s, and maximizing that profit potential as well at the same time as mitigating the risk. So for the time being, I am going to mark the Aussie NZD in the blue, which is split trade ideas, one on either side of the market. But I'm only actually going to have the short available. So we can have an approximate path set out for the long. Okay, so that, just to suggest our bias, but this is the only pending order that we're going to have in the market, because at the moment we have to wait the market to do quite a bit of work before we get up to that area that we can, sort of really start seriously considering the long. Right, let's move on, guys. Aussie dollar. So that point there is right bang in the middle, unfortunately, yeah. Okay, Aussie dollar I'm going to sit out of at the moment. I'm going to let that do its thing. CAD Swiss. That's a strong move. Yeah, that's been a strong move. This has been quite... it's been quite a good range. Not perfect by any stretch, but it's been pretty good. I'm still not ready to participate in that one yet, though. CAD yen, break close retest liquidity on the daily chart. Yep, that's nice. Yeah, that's nice as well. So we do have that area in there, which is the next point up. Back down to the 15. And then a break of structure in there. Yeah, okay. Right, so first of all, trade's been built in the CAD yen, pending order. Market execution via the pending order. Stop loss at the 50% point between these two zones, 1 to 2.4 yield. We do have a TRF. TRF is situated there at about the 50% point of the trade, 109.83. But that all being said, that's actually quite a nice trade. So that's one. The second is probably going down to the NFP low. So we have this point in here, which frankly the market's breaking now. Is that the best area for the breaker structure? That's the question. Because that there is an outlier. The real point of liquidity, I would think, is there. Because we have such a series of highs. So that's where I'm going to have that. Target profit is going to be down here. Yeah, so that's a decent trading margin as well, isn't it? Yeah. Okay, so the short is going to be below here. This is again another breaker structure, and I'm actually only going to go for a 1 to 2.1 on that one. I don't want anything more than that. We have a TRF, which is situated here, which honestly, this is like a mirror image of the long. The long has a slightly better risk yield, but honestly, the two positions are one and the same. And this area in the middle is going to be the no man's land. Okay, so that's again going to be in the blue, representative of a split decision. We've got one on the long, we've got one on the short. And this area in the middle is the no man's land. Right, what time are we on? It is 2:10. Okay, we'll get down to the euro yen, and then we'll cut off from the FX space. We'll get onto the stocks, and then we'll cover the second half of the asset basket. I say second half. We'll cover the other 2 quarters in tomorrow's session. So Euro Oz, that was removed, the Euro Oz, so don't worry about that. So Euro Oz then, we have a very, very nasty looking bit of price action there, isn't it? That's not nice whatsoever. We have important liquidity in here. Okay, so cash rich area in the market. We have a very nice area up there as well. That is a beauty. Beautiful area. So a really nice trading margin there on the Euro Oz. So far, this one's journey up to this point has been nasty. But we do have the availability of this move up and coming. I'd say the TRF, based on the inflection point we had here, it sits right in the middle. And that is one hell of a TRF, let me just tell you. Based on current price action, the recent price action, this has been very successful. We can see that. Probability is on our side. But we cannot dismiss this huge move that took place at the end of August, beginning of September. So it's best just to have that there as a visual representative of where we may see the price action have small, little price action pullbacks or price manipulation taking place all at around that 162.50 to 162.60 areas. Now, in order to get this trade idea off, make no mistake, this is a slightly longer one. It's going to be quite big. We want to see the break close and the retest of 162, followed by then the break of structure, leading up to our target profits. So push out, push in, push out. Target profit up at that high. Entry for the trade idea, target profit up there. Stop loss down here. You're looking at an approximate 1 to 3 risk yield on that one. Very, very nice indeed. And that's the Euro Oz. I'm not going to have a short on this one. There is short availability, but honestly, guys, there are so many indecision points in this move, it makes it a complete minefield to consider shorting it. So I'm just going to stick with what looks easiest. There's nothing wrong with simplicity here. So I'm going to label that one a green, representative for the long. Euro yen. So Euro yen, honestly, Euro yen is triggering now. That is the Euro yen short. And we're looking at Euro yen short back down to the point where we were looking at buying from last time, 161.10-ish. So I'm not going to trigger it short instantly. I'm just going to take a moment, 50% point for the stop loss, target profit down at that point there at 161.06. That's yielding a 1 to 2.8. I think that's really nice. Very strong margin for the stop loss there as well. And I'm going to plug that in right now so don't miss. So that's the Euro Yen short. Pending order market execution. Frankly, guys, this one could be done before the end of the stream. Not done in terms of target profit achieved, but I'm talking about entry being triggered. All right. Right. Okay, cool. Right, let's wrap that up there then. Let's move on to our US stocks. I'm just going to remove all these. These are all anyway. All right, I'll do that after. Okay, US stock market. Let's go. So, today is a little bit of a choppy day for our stocks. Not going to be extremely easy to find our trading margins. It's not impossible though either. Our trading margins at the moment based on the anchor chart are going to put the floor of our margin there where we're actually trading away from now on the NAS 100 with the ceiling of our margin up at around the previous highs, which is going to be situated around there. So this is the space in which we have to work. Today we are looking at opportunities from either side of this as we usually are. The break of structure point, luckily for you guys, is actually very, very close to where we're trading at the moment. So if I want to take a long in the NAS 100, I can and do have the capacity to take a long from there with target profits up at around 20.075 and the stop loss at the 50% point between these two. That's at around a 1 to 2 risk reward yield. Now, obviously, we're looking down on a 1 minute time frame here. So if we're looking at a decent pop up over the break of structure area, then the stop loss can be at around this point here, which means that risk yield pops up from a 1 to 2 to a 1 to 2.5. Which is actually really, really solid. That's quite a significant trade, but not on a 1 minute breakout. Okay, when you have a breakout, this can be done quite quickly. For the short in the NAS 100, frankly, you have every opportunity to short it from there down to the low. That's not actually, it looks ridiculous on a 15-minute time frame, but that's actually not that bad at all on the 1 minute time frame at all. So I would be looking at this area in here as the breaker structure point. Consider this a fake out, admittedly, not great to have that in our entry criteria, but it is simply what it is there. We have this as an entry, target profit, and our stop loss, which is going to be about there for a 1 to 2.1. That's going to be the short. If you want to take a bigger long, then you do have the possibility of waiting for the price action to come down, reject, break structure, and take the whopper, which is the big one. But that is, honestly, I would advise against it being too great for a Monday afternoon. It's the first day of the week. I just don't think the markets have it in it on a Monday. More times than not, I've been proven right. So I would stick to this and this for your two opportunities in the NAS 100 today. Looking at the Dow Jones at the moment, 15-minute time frame. The trading margins in the setup for this one, very similar to the NAS 100, but honestly, guys, I am going to be favoring the NAS 100 significantly so today. The long margin is there. If we look to the left, it has almost no respect whatsoever. The low is the low of the move that we've just recently had, which has quite a bit of respect. As we can see the whole way along, there's been multiple inflection points all the way along this level of liquidity. Problem is with these 2 points is we have this area in here as well, which is also a relatively strong level of liquidity. Market's inflection points have reached all the way along here. There's been a lot of institutional manipulation, a lot of institutional selling and buying power, which has taken place as well as the result of fundamental catalysts. It's really, really messy, but it's not impossible, because what you can say about this is we do have two quite evenly matched margins for our longs and shorts today based on the 1 minute time frame. So on a 1 minute chart, you can be going long from there to there. You can be going short from here to here. You can be going long from here to here, short from there to there. You could be going short from 42.37 all the way back down to 42.16, except that, again, is not advisable because of the day of the week it is. Monday, I just don't think the market has it in it. So if you are a Dow trader today, you will be looking at trading the space between these two margins, this one here and here, or this one here and here. All right, I'm not even going to bother putting the trade templates up for you because it's pretty damn clear, right? You guys should know that know everything that you need to know, and I think you'll be absolutely fine doing it between these areas. Do you feel quite clear at where you need to be today? Excellent. Perfect. All right then, guys. Well, I will love you and leave you there then. So I'm going to wish you all a wonderful rest of the day. I will be here trading live right alongside you. So hit me up with things that you got going on if you can in the Traders Lounge. And yeah, just wish you the best of luck. So have a good one, guys. Go and grab yourselves a quick coffee. Get ready for the session. Let's go get 'em. Take care then, team, and I'll see you then. Bye-bye.